Thank you for being with us. Dinesh, I want to start with you now. The COVID-19 pandemic has accelerated the democratization of financial markets and led to a boom in retail investing. Do you think that these novelties are a temporary reaction to an external shock, or are they here to stay?
I think there are a couple of reasons what really led to the kind of scenario which we have seen. Well, of course, part of it is a demography too. And also the contributing reasons are also the ability of the younger generation of investors to undertake higher risk, and also flavor for having products which are other than coupon products. Apart from that, of course, their own lifetime goals which are there. To achieve those lifetime goals, perhaps the coupon products were not the only solutions. So that is something which we have seen. In addition to that, some flavor came in when there was a shift from defined benefit to defined contribution as far as the pension schemes were concerned in the corporates. So that also led to a situation where large number of people started having a flavor of the markets as compared to having a flavor of the coupons which they were earlier getting by investing into government securities. So I think these are some of the features. And apart from that, I think the convenience of the digitization also led to a scenario where people could feel that it's easy to invest through this mechanism too. And they can achieve their lifetime goals. They can also see to it that there's a relevance of the market products. And it was also, part of it is also allocation, which was seen.
I actually started this segment without launching a video which Amundi team has prepared. Let's take a look.
Until the end of the 20th century, investing was considered a job only for investment professionals. New generations are driving their capital to new frontiers, new platforms, with new priorities. Millennials and the younger generations are earning more, saving more, and investing earlier. They will reshape the financial industry. We asked people from around the globe where they are currently investing money and their opinions on the new trends.
I love crypto. Crypto's awesome. I recently have some family getting into it, but I am not really jumping on that bandwagon.
Pour moi c'est le futur.
Dal momento in cui un uomo X o un Warren Buffett vuole comprare tot, i valori cambiano, però noi persone semplici non riusciamo a seguire, quindi...
La crypto, je vous avoue, je n'y connais strictement rien. En fait, je trouve ça totalement abstrait.
I think crypto is kind of gambling.
It's very easy to the company will just go like boom.
但係我都會覺得佢係一種都算係而家比較可靠同埋高回報嘅投資產品嚟嘅。
L'aspect de confiance, c'est peut-être pas encore toujours là, notamment pour les NFT.
I would consider it more for short-term trading rather than long-term investment.
I actually do have a financial advisor who I just started seeing.
例如 Facebook 啦、IG 啦、YouTube 啦。
I go to my father for financial advice.
Je me réfère à des personnes qui sont dans le monde de la finance aux États-Unis.
I prefer to do my own research.
Forums, social media.
Or from like Twitter. Get some alpha on Twitter, yeah.
Trying to do things that aren't damaging to the environment or the planet.
C'est une thématique réelle et dont chaque personne doit prendre en compte dans ses investissements.
One stone kill two birds. Yeah, like it's like charity, but it's not charity, and you're still getting money. Yeah.
Be able to responsibly grow it and safely grow it.
It's a buzzword. I mean, it's a flavor of the day.
Sì, però è una cosa che vedo quasi impossibile.
I look really for other people of color also who invest. I think that was a big part of how I was able to choose my financial advisor.
Aujourd'hui, il y a une réglementation qui est quand même très vaste, très touffu. Donc l'idée c'est qu'ils puissent nous éclairer sur cet aspect réglementaire.
Actually interested in helping you rather than just doing it for their own benefits.
E le banche oggi non sono più banche, almeno parlo per gli sportelli, quindi ho difficoltà a trovare una figura di riferimento.
即係真誠嘅意見俾你，而唔係一啲好 tricky 啊、短期啊，話哦呢下錢係一賺就有㗎啦，即係咁樣咯。
I want them checking in regularly, feeling as though it's not just somebody trying to make a commission, that they're really there as a partner, not just transactional, that it's really is a team effort to help me figure out what my goals are and how to achieve those.
So, Annamaria, this boom in retail investing, which we've seen, is it here to stay?
I see 5 reasons why it is here to stay. Just to echo what was said before, there are demographic changes. And so, for the new generation in particular, it's going to be very important to save for retirement. And note with the COVID-19 pandemic, some government had made it possible already to withdraw money from the retirement account, so we have to replenish those as well. So, this is one tendency. In some countries, not everywhere, there is also a reason to save, for example, for the long term and to invest because of the cost of education, which has grown faster than the wage growth. And so you need to plan for that as well. And third, and importantly, in a time of inflation, we need an edge. And of course, investing in the stock market could be a good edge against inflation.
Not too risky, in your opinion? Don't people view it as risky given the shocks happening right now?
It is risky, but you lose wealth by keeping it in a checking account or investing in an asset that gives you a negative real return. Right? So I think actually the inflation itself will give at least more demand for investing. And I wanted to say 2 more things as well. One is the fintech has decreased the cost of accessing the financial markets. This can be important, particularly for the young. And I also think, and again, we are into the trend that many countries have implemented national financial strategies and educated investor more. So, there is some education, for example, about risk and so on. And this is one of the reasons, several reasons why, this might continue, or I expect this to continue in the future.
Dinesh, I'd like to bring you in again. Do you see or anticipate any differences in retail investing patterns in developed versus developing countries?
Yeah, very much. I would say that generally, when it comes to the developed markets, there's almost a perfect system when it comes to information sharing. And that is why perhaps creation of alpha becomes a bit of a challenge. And that is the reason why, and when it comes to developing countries, there is a information asymmetry. So that also leads to a situation where there are opportunities for generating alpha. So I think when it comes to emerging markets, we have seen that there is adequate demand for very active funds also. But when it comes to developed markets, it's more of a passive, which is really playing there. So I think that is a kind of a behavioral shift which we have seen. And apart from that, I would also like to mention that what has really happened in the last couple of years when practically all the central banks were supporting the economies by printing more and more cash. That was a point of time when a lot of money have actually flown to the emerging markets for finding the better returns. That was also a point of time when the banks were not in a position to offer interest rates to suit the investment requirements of the customers. So naturally, they were finding better returns in the markets, so it moved in there. When the money moved away from these markets, that's a point of time when investors started seeing the markets are coming down. But at the same time, during the period when all these investors were being brought into the markets, there was a whole lot of emphasis on investors' education. that investors' education gave the confidence to the investors in the emerging markets, and by virtue of that confidence, perhaps they will stay on in the market. This is the behavior which we have seen in the recent past, and hopefully it will continue.
Annamaria, speaking about emerging markets, evidence indicates that there are lower levels of financial literacy, particularly in emerging markets. At the same time, we're seeing a rise in retail investing and a shift of financial responsibility from governments and employers to employees, for instance, with the transition from DB to DC pension plans. Do you think that these increasing financial responsibilities and investing possibilities offer an opportunity to enhance financial literacy?
Absolutely, and this has been how this initiative on financial literacy have started. So if we look at the countries that have implemented the most successful financial literacy program, they have started because of the change in the pension system. So for example, if I think of New Zealand, the financial literacy was actually in charge and was the responsibility of the pension commission. So often financial literacy or the focus on financial literacy has started because of the shift into the pensions, and there is a clear need for people to invest in the long term and therefore to invest in the financial markets. And I have to say, investing in this is a win-win. It's a win-win for the government. So they don't have to, for example, rescue people or support people because they are poor at retirement. It's a win-win for the financial industry as well, because there will be more money into management. But also I want to mention that while this has been a big push, in my view, another big push has been the financial crisis. The financial crisis have shown the cost of financial illiteracy. It is very expensive not to engage in the proper mortgage for you. It's expensive for the individual and for the economy. And more recently, it's very expensive and painful for people not to have a buffer stock of savings if a shock happens. And we realized that, for example, even in Europe, 1/3 of families didn't have a reserve, not just for shutting down the economy, but for a small shock. So I think not only the demographic changes, but the crises themselves have really unveiled the importance of financial literacy.
Now, you touch on this point about the role of national governments in rolling out financial literacy programs. Should financial actors partner with governments and other institutions to develop these literacy programs?
Absolutely. So as you know, about 80 countries now have a national strategy for financial literacy. And I actually think, there is this proverb that it takes a village to educate a child, and I think it takes the whole country, the whole cooperation to educate, to increase the financial literacy of a nation. So it clearly is a collaborative effort. Having said that, and being in charge of the national strategy for financial literacy in Italy, it has been very hard, for example, for the private sector to collaborate with this national strategy, mostly because the national strategy have all of the regulators of financial markets. So, sometimes the collaboration is hard to do, but I think it is very important to collaborate. And I also think, and this is, in a sense, a message for everybody here. It takes a vision. You have to be a visionary leader to promote financial literacy, because the benefits are in the long term. So, sometimes policymakers do not have that long-term vision. And one evidence of that is, even though we have national strategies, very little money has been devoted to those national strategies. And, some of the initiatives are very slow-moving. And, for example, we need financial education in the schools. Anytime we don't have a generation of young people with that knowledge.
How young are you talking about?
Very young. In fact, as soon as you see the money, when the tooth fairy come, You know, it gives you the money. This is the time to do financial education. Invest that. So let's start as early as possible. And I'm not kidding. We should start in the elementary school as we learn, you know, any other topic. And, you know, we should educate the young because the world is very different, and because we are going to pay for the cost otherwise of financial illiteracy.
Dinesh, what are your thoughts coming from a country like India?
Yeah, I think it is one of the very important component. And financial literacy, not only to the potential investors, but also all the players in the ecosystem, because very often when it comes to distribution, the distribution also, the people who are distributing, they also should have adequate financial literacy. And I would like to add here that in a country like India, our securities market regulator, which is SEBI, has prescribed an investor education allocation for each of the fund managers. So they have to allocate a certain sum of money, and that corpus is being utilized for educating more and more people. And apart from that, when it comes to the people who will actually market the products, they also have to have the required qualifications. And that is, I think, that is going a long way in terms of building up the credible distribution ecosystem, which to my mind is the necessity. Unless and until it is strengthened, there would always be a challenge. And apart from that, of course, financial literacy is starting right from very early days, catch them young, right from the school days.
From when the tooth fairy comes.
Yeah, what was said. So I think it's a very welcome suggestion. And in our country also, we have got this kind of education which we are imparting. And we have started imparting not from the tooth fairy days, but somewhere from the high school days, we have started doing it. So that is also building up some kind of an appreciation for the market products as well.
You touched on this point earlier about the role fintech companies play in helping us make financial decisions in our everyday life through a wide, variety of ways. Let's talk about mobile payments, cryptocurrency exchanges, crowdfunding platforms, etc. How can we make sure that that fintech use, crosses all of society and not just those who are only financially literate?
Yes. So I think fintech has a lot of opportunities, but also risk that we need to take into consideration. So, fintech has decreased the cost, has make kind of finance and investing easier, but, there are a lot of disparity, and I think, the lack of financial literacy makes the use of fintech riskier because money is invisible and the transaction can be very, very fast. According to our research as well, we have actually seen that the people who use fintech do not do necessarily better in some of their financial behavior. So, we shouldn't think that fintech is a substitute for financial literacy. If any, it's a complement. The more we use fintech, the more we have to be financially literate.
Yeah.
And, and I think of fintech, there is a lot of tech and too little fin, I think, in the fintech.
I think there's too much tech sometimes.
Yeah, there is too much tech. And I think we need a fin edu tech, right? So we want to use technology to do financial decision educated. So let's go fin edu tech rather than the fintech alone.
No, but sometimes making a mobile payment, you have to open one app and another app, and it's too much. And I just feel that there's too much technology. You end up alienating a part of the population based on age.
Yeah, first of all, fintech is very much used by the young, right? So it's very, I would say, used disproportionately among the millennials. I actually think it makes transaction very easy, and using an instrument that you love, which is the phone. So I think, for example, in terms of payment, I think we have made very easy to pay, right? And people love to pay. The problem is, you need to have the liquidity to make that payment. And if you make it easy to pay, you make it easy to buy. So we need to make it easy as well to save and invest wisely. So, in addition to payment, we need more development in these other transactions.
Interesting point. Dinesh, I'd like to bring you in again now. The retail investment boom, which we've spoken about, allows individuals to take control of their financial needs, act on opportunities in the markets, and hopefully expand their savings. In practical terms, how can we support this trend and foster retail investors' optimization of their activity in the financial markets?
Well, what happens is that once we have a very clear picture in terms of the financial goals of the investors, then perhaps the prescription which is offered to them is more in terms of what can really help them in achieving those goals. And volatility is a reality for the financial markets, and people have to learn to navigate those situations. To really hedge against the volatility, what we are advocating in the country like India is to go for a systematic investment plan. So when the markets are high, then of course there is natural flavor for such products. When the markets are low, we are actually educating the customers that it's a time when you can acquire much higher number of scrips of the targeted stock. So they should continue to invest. They should not exit from the market. So that is something which we are really promoting, and we have seen a huge traction in this particular product. And I think this will bring in the stability of the flows into the markets as well. This is what we have seen in many respects.
Now, it seems that there is a lot of change taking place in the financial services industry. What new behavioral trend or technology are you most enthusiastic about?
So I'm going to give you an answer that will surprise you, but I am very happy, for example, about this interest in financial literacy. It is the first time I am invited to this forum, right? So I don't think that in the past there was a discussion of financial literacy. And so, this is, I think, a very important trend, and that we have seen that, finally there is a focus as well on the individual investor and the role of financial literacy. Second, I'm interested in, two vulnerable groups, which I think have emerged, and I think we need to talk more about them, which is millennial and women. So, I haven't heard enough about women investors, but, women are going to be very important investors, and we need to pay attention to them. And I'm going to give this to everybody here, so pay attention to women. This is, I think, a very important group of the population. And these are the two trends I'm very excited about. At George Washington, where I teach, we have started 10 years ago a course in personal finance. So our students go out and they are ready to invest. So, hire them or, invest with them.
I think in countries like India as well, you see a lot of programs specifically where women make the financial decisions for the family. So you're not wrong there, I think. What are your thoughts?
To be very precise, I think they are the best financial managers. This is what we have seen.
Yeah.
They manage the finance the best. It starts right from the household.
Exactly.
Households to the corporates, everywhere they manage the finance the best.
So tell me what behavioral trend or technology you're most enthusiastic about.
Yeah, well, of course, I think what was mentioned in terms of fintech is quite relevant, because there is a overbearance of the technology as compared to the finance. But I believe that when it comes to the commoditized product, I believe the fintech is the best of the way to offer the solutions to the investors. But when it comes to the complex products, the AI is a help, but eventually I think it is the human interface which is very much required. Human interface can use the AI, but eventually it is the guidance of the physical guide which should be the trend going forward. This is what my belief is.
Annamaria, how do you improve financial literacy amongst women? Because, in that video which we played earlier, you saw the young people where they get their information from online, social media, Facebook, Twitter, etc. What about women? How would you target them specifically?
We have designed many projects for women, and I think you need to start listening to your, in a sense, audience. And so women, for example, share an interest in deciding not only for themselves or for the family. So you have to cater to that, in a sense, need. So considering, in a sense, what women are doing, and you can design program for them. One advantage of women is they are very interested in learning. So it starts with that. It's much easier to, in a sense, provide education to a group who want to learn. So I think we have already a very sensitive audience, and I think we need to design program for them. One of the things, for example, we have discovered is that women detest jargon. And I am with them. I detest jargon because, finance is a language, but you have, you have to first understand it, and, we can speak in English or in Italian in my case. So, it's very important that, we use the proper language, that we understand kind of the need of women, and because of their interest, they are a very active audience. So I think they are the ideal group to do financial education. And you can do it in many different ways, starting in school, and then in the workplace, and then in the places where women are and where they are interested in learning.
I want to talk about the younger generation in India, specifically because you're with SBI. Where are they getting their financial literacy from, if not in the schools? Is it also social media?
Yeah, social media, of course, it helps the younger generation in doing adequate research. That is something, thanks to social media, that enough reactions and responses are also available on various entities where the investments can be solicited. So I think from that point of view, social media has got a role to play, but there should be adequate filters which need to be used by the people who are actually consuming the social media.
But also, are they getting it from within the family, financial advice?
Yeah, I think...
or is that less so?
No, I think they get guided more by their peer group as compared to the families. This is what my sense is.
Okay, we're going to have to leave it there. Thank you so much for being with us. It was really interesting. We're going to move on to our next session with Amundi's John O'Toole, head of... you can go ahead. Thank you very much.
Thank you.
Thank you. I think we can keep the mics over here. Thank you so much. It was really interesting. I'll take the mic. Thank you. Up next is we're going to hear from Amundi's John O'Toole, head of multi-asset investment solutions, and Fannie Wurtz, head of the distribution and wealth division, as well as passive and alternative business lines. Welcome to both. Great to have you both with me here. Now, as you just heard, our previous panel discussed the great transformations of retail investors' behavior from an asset management perspective. Fannie, what do you see as the main trends emerging?
Thanks for the question. Let me step back and look at the overall context. Our whole industry, be it asset manager, distributors, and wealth manager, are going through a great transformation and at a pace that was never achieved before. There is a growing sophistication from private clients that we all heard, and that is facilitated by technology and digitalization, where they want to remain in control. They have access to multiple comparable tools. There are obviously new interaction models that we need to think about to interact with private clients, and this is where technology will be paramount to that. There is an increased administrative and regulatory burden with SFDR, MiFID, KYC that we all need to take into consideration into our value chain. And on the product side, there is a structural shift from traditional product to more ESG, impact investing, and thematic. All that in a context where there is a pressure on the cost and we are facing margin pressure. There are some huge growth opportunities as well. The wealth is growing globally and at a rate of 5% per annum. And there is a shift, notably in Europe, in retirement space from the public sector to the private sectors, and this is where distributors and asset managers have a key role to play. All of these elements are obviously challenging and redefining the way distributors, asset managers, and wealth managers are interacting together.
John, I'd like to turn to you now, because we've heard about the role fintech has played in the recent past. What are some of the risks for investors?
Sure. I mean, digitalization really has led investors to change the way they make decisions. So people have easy access to a much broader range of investment strategies. They have very fast and efficient execution. And what we've seen, this has led to a very large boom in retail investing. So in the US, for example, during the pandemic, the retail footprint in the equity market doubled. In the crypto space, by the end of 2021, over half of the holders of crypto assets had only invested in those markets during that calendar year. So you've had this big fear of missing out, and that has led, I believe, to some speculative and bubble-like behaviors. And we can see that in the recent market sell-off. Some of these really popular retail trades have unraveled quite spectacularly. So for example, a basket of popular meme stocks, I know it's not a European thing, but it's down over 50% year to date. Bitcoin, the poster child for fast retail investment, in the last 18 months has doubled and halved twice. So these are some very strong trends that people are being exposed to. And in the retail space, our job as managers is to help investors guide through this. And we have built some tools and the technology that's available to expose people to goal-oriented investing. We can nudge people to change a financial decision if one of their goals is at risk. We can incentivize our clients to stay invested for the long term. And really, technology can help us to avoid some of the negative behaviors that we're seeing in the retail investing space.
That's an interesting thing about all the risks which investors see. Fannie, how can asset managers help people focus on long-term personal finance management, and how do you see the role of asset management?
As an industry, we have the duty to help private investors at first, obviously, reaching their long-term financial goals, be it for savings or retirement, but also to prevent them to being caught in some harming behaviors. And when we look back at their interaction, distributors and wealth managers are no longer thinking in terms of products, but in terms of full solutions for their end clients. They tend to work with fewer asset managers, but asking more and demanding more from them as long-term partners. At first, they expect the asset manager to build a custom solution over the broad offering, be it active, passive, including as well real assets products, and also the ability to make those products evolve over time, over crises, over the journey and the investment journey. At second, they also expect the asset manager to accompany them by training their networks, training their advisors, and providing mass educations to financial advisors and also to their private clients. And mass education is absolutely key, as we heard in the previous panel. And finally, they are also expecting their asset manager to help them focusing on their core job, big financial engineering and wealth structuring, by outsourcing some of their infrastructure challenges. Technology is a good example to gain scalability, profitability, and cost efficiency, but it can also be like optimizing open architecture.
Do you agree? I don't know if you heard the previous panel when Annamaria was saying that women want to invest, they want to learn how to invest, but they don't like the jargon.
This is a fairly good observation, but mass education is for everyone, for women, for men, and as we said, private investors are getting much more into the markets, they are getting much more sophisticated, they are comparable tools, and it's up to our industry to mass educate those people by making, obviously, education available for each and everyone.
Do you agree with that, what Annamaria said, there should be education from a very early age, essentially, financial literacy education?
Absolutely. It's extremely important because one of the things that's happening with what I've described, these short-term impacts in retail investing, people can become disillusioned, become fearful about planning for retirement, and there's not enough planning for retirement, and that has to happen really early. So the interesting evolutions that we see in the marketplace is we have a lot of financial technology available which can simplify this kind of onerous task, and it can be a kind of frightening task. People find it difficult to engage with the concept of long-term retirement, and I think somebody earlier mentioned this concept about time. And the very real impact is we have technology now that embeds a lot of an educational component, and this can really help us to navigate along with the client and be reactive.
And that's specifically the role asset managers can play in helping clients when they think of their retirement goals, essentially.
Absolutely. I mean, there are many tools available to us now, and it demystifies this topic somehow, and makes it safer, and people can construct, safe, robust, effective portfolios that have exposure to multiple asset classes in all the different market cycles. And we have to incentivize people to do that somehow.
Fannie, what are the key messages attendees should be taking home from this session today?
For me, there are 3 elements to retain. At first, there needs to be investment engineering. Then there is a need to define investment solution for each and everyone. Be it for saving, for retirement, goal-based investments requires assets and liabilities management, and this is where obviously asset manager have the knowledge and can share it. At second, as you outlined, there is a need for mass education. There is a global need for much more financial knowledge to be shared for private investors, but as well to advisors. These are obviously the knowledge that asset managers do have and need to transmit and can share it. And when we combine investment engineering and mass education, it may require some technological capabilities to allow mass customization, scalability, and profitability for all the actors.
Do you agree with that technology sort of can alienate part of the population?
It can be a big enabler, I believe.
An enabler?
A positive enabler, because it, like I said, it simplifies the process. So the idea of form filling, and if you think about how people have managed their personal finances now, you have to open accounts, fill forms, it's a lot more onerous.
Nightmarish.
In future, people are going to be doing this on their devices, and they're doing it already. Of course, the problem is that they're also using their devices to gamble, essentially, and they have a lot of exposure to financial instrumentation, which is facilitating all of the behavioral problems that we discussed earlier in the panel. But if we can take that technology as an enabler and put it to the longer-term pension savings problem, I think that's a big opportunity.
And finally, from you, what should people be taking home from this session? What is the main takeaway?
I think it's all about education, and financial literacy is extremely important. That has to become a core component of people's lifestyle, because people get to a certain stage in their life and it's too late. When people begin to engage with this problem, they may be in their 30s, 40s. If they start early on, teens, even 20s, we all know that time is on your side and time is your friend, and that's how you can grow a pot of savings and enjoy the green future that we're all going to have.
A little long retirement we all hope for. John O'Toole, Fannie Wurtz, thank you very much. We're going to take a short little break. Stay in your seats. We'll be back in just a minute.